Good evening, and welcome to this week's special and presentation entitled Keep Your Eye on the MTI. My name is Glenn Tompkins, Senior Instructor here at VectorVest, and it's my pleasure to give you this strategy this week. As you know, we time the market, and I believe we do a pretty darn good job of it. Timing the market does not mean that we predict the movement of the market, but we follow the trend of the market to keep our subscribers on the right side of the trend. If a trend is rising, you have the ability to know that it is. If it's falling, you have also the ability to know that it is. So let's start to begin with some of the tools that we use to time the market. Starting with the price of the VVC or VectorVest composite. The VectorVest composite is an indexed arithmetic average of all of the stocks that we track in our database, and right now we're tracking over 9,000 stocks. The sheer number of those stocks tracked in the VVC give us a better representation of the broad market move, not just today, not just yesterday, but overall what's truly going on in the market from a trend perspective. RT, or relative timing. This is one of our core proprietary indicators, which is cast on a scale between 0 and 2. It's going to show us the direction and the magnitude of the market. So for example, if RT on that scale between 0 and 2 is above the value of 1, it's favorable, and it tells us that the market is in an uptrend. So if the market's in an uptrend, that's a good time to be buying stocks. The further above 1 it is, the faster in an uptrend it is. The next indicator, the BSR or buy to sell ratio. This is an indicator that looks at the overall health of the market because we look at the specific relationship of buy recommendations in the software divided by sell recommendations. So, simple. If that indicator is above the value of 1, clearly we have more buys in the system than sells. The higher above 1 it is, the more buys compared to sells we have in the system, which shows that the market is healthy at that time or showing signs of strength. So just think about this. The price of the VVC tracking over 9,000 stocks, RT, which tracks direction if we're in an uptrend or not, and the buy to sell ratio that looks at the health of the market. Now, I don't think there's anybody else out there that has an indicator that looks at market health. But you put all three of these indicators together, combined, they make up the MTI or the market timing indicator. This indicator is also cast on a scale between 0 and 2. Makes it simple. Above 1 is favorable, below 1 is unfavorable. It tracks what we call the underlying trend of the market. Remember, we are trend followers when we look at timing the market. We don't predict, but the underlying trend of the market is very important to take a lot of the noise out of the market. See, we get encumbered by a lot of noise, about a lot of news, about a lot of data. All of that can make a trader or an investor head spin. So when we track the trends of the market, it takes a lot of that noise out so that you can make better decisions and not be knee-jerk reactionary to a story that comes out today. Now, this indicator also tracks levels for potential market tops and bottoms. So even though we track the underlying trend of the market, is it rising, is it falling, but we can track potential market tops and bottoms, and the levels are here. The tops, we're looking for a level on that MTI at 1.5 to 1.6, and for bottoms, we're looking at levels at or below the 0.60. Special note here. These are zones. Sometimes we may reverse or come from a top or from a bottom without hitting these numbers exactly. But the deeper we are into these numbers, the stronger the reversal most likely will be. For example, if the market tops and we're a market top and we're at 1.65 on the MTI, that lends credence that the market is going to probably have a hard pullback because it's so overbought, and the opposite for bottoms. Even though it's at the zone of 0.60, if it gets down to 0.4, 0.3, or even 0.2 as it did one time way back in time, that means that the market is in scale for a big reversal back to the upside. So we can use these to track the underlying trend of the market. We can use these for heads up to let us know when the market is looking for potential markets and tops. And with that, that's outside of the noise. This is the useful information that you, as a VectorVest subscriber, have access to. Not only is it useful, it's very powerful in how you manage your trades. So let's go into the software and do some analysis. I'm going to open up the home page of the VectorVest software. From here, as we can see, and we talk about these indicators every day in our daily color guard report. Folks, if you're not watching the daily color guard report, you're missing out on one of the biggest benefits of being a VectorVest subscriber. We give you market guidance every single night. So we talk about the VectorVest at a glance, the price of the composite, how many stocks it tracks. We track its price. Where is it at right now? And where is it in relation to the previous week and the previous day? RT on that scale between 0 and 2. Well, the market right now is pretty flat. It's not above 1. It's not below 1, but it's pretty flat. That tells me that I need to be careful. All right. The buy to sell ratio looks at the percentage of buys divided by the number of sells in the system. At 1.60 on that scale between 0 and 2, we've got a lot more buys in the system than sells. The market is showing us that we have strength in the market. These are things that make us more confident that it's okay to buy stocks right now. Now, we have a down day today. As we look at that, one day does not make a trend, and this is where the noise comes in. So we take all three of these indicators, wrap it up into one, the MTI. On that scaling between 0 and 2, it's above 1. So the MTI is at 1.45, and because it tracks the underlying trend of the market, we can say that the underlying trend of the market is up. All right. So the power behind this indicator is so important because it wraps up three very potent indicators into one indicator, that MTI. Let's take a deeper look. Let's go to the graphs tab, and we're going to change from a stock graph to a market timing graph. We do this every night in the daily color guard report, and we're looking at a one-year look back of the VectorVest composite that tracks over 9,000 stocks. All right, we can clearly see by trend overall moving down, most recently moving higher, but overall we know that this has been a down year because of high inflation, because of rising interest rates, because of so much is out there. But this is where the power of the VectorVest software comes to play for you. All right. Here's the MTI. All right. And I'm going to put this on a 5-year look back period, change it from weekly to end of day 5-year. Let's give a good test of what this is all about. Now, keep in mind a couple of things. Remember that these are zones. These are zones, and I'm looking at right now from market tops to market bottoms. We're going to come back and look at the trends of the underlying trend as well. But let's start off with the heads up indicator of looking for market tops and market bottoms by way of the MTI. Here, I have a level of 1.5 where the market is starting to look for a top, and I've got that level of 0.60 where the market is starting to look for a bottom. You can very quickly discern that on some of these indicators or some of these calls where the market actually pulls back in a heavy way after being in that overbought scenario where the MTI is in that range or that zone of 1.5 to 1.6. Now, sometimes you look and go, man, how long can it stay in that zone? How long can it stay in that zone before it does anything? That's why the special note is there. Just because it's in that level of 1.5 to 1.6 doesn't mean that the market stops on a dime. Well, remember, we don't predict. And if I were going to say once it gets to that level of 1.5, 1.6, turn around, sell. Notice that we don't do that. We always give the guidance that says, in these times, buy if the market is rising or, things of that nature. We always give you the guidance so that you can make the call, but we have the indicator to help you as well. So very quickly, we can see back here in 2020, we got into that level. And what did the market do? Good gracious, did it fall off the face of the planet? Well, we know that this was COVID, right? This was during the COVID time. And then very quickly, not very quickly, but we fell, and got to that level where the MTI got to that level of selling. Look how low it got. The MTI got to a value of 0.25. I think it even 0.22. 0.21. Let's go back to 0.21. That is a grossly oversold market. And the MTI is giving you the heads up. Hey, keep your eye on this. So how do I know in this level of being oversold when it's the right time to start to look at buying stocks? I'm glad you asked that question. So pretty much the low coming into March 20th of 2022, the MTI definitely way oversold. What do we look for? Well, let's go change the call here to the primary wave. Coming off of that low, all right, getting ready. We're already in a situation where we know the market is looking for a low. What are we looking for before we start to buy stocks? Let's look for the primary wave to give us some confirmation. Now, we're still buying in low at this point, right? The MTI is still at that level of 0.28, but what did the market do subsequently after it hit that level and started to move higher? The first primary wave off of that low, what did the market do? Good, googly muggly. We had an opportunity to take advantage of a rising market. And we were still buying in at the level where the MTI was below 1. The underlying trend of the market was down, but we had a heads up of knowing that the market was looking for a bottom. And look at that run up. Now, along the way, we got above, below, above, but subsequently over that time period, what did the market do? The indicator did exactly what it was supposed to do. Let's talk about coming into that whole COVID situation where we were at a market top. Now, look at this, 1.5 or so, the market was still rising. That's why the special note is there. It is a zone. This is a precautionary thing. Heads up. Hey, folks, something is going on. The market looks like it's overbought at this time. But if the market gives you the opportunity to still buy stocks, I'm not going to tell you no. Keep in mind, the underlying trend of the market is up. It's at a level, though, of telling you to be cautious. Did it work out? Absolutely. Did it save your bacon? Absolutely. Look at the pull down. And guess what? From that level of looking for a market top, what was I looking for? The first indication where I got a primary wave down, and that happened on 2/21 of 2020. Already prior to that, though, the underlying trend of the market was trending lower, but finally got below the value of 1, and the primary wave was down. Was that a great opportunity from a trend tracking indicator? It did exactly what it was supposed to do. Now, hold on here. How about times when we are at a level of being overbought? Let's zoom in here. Being overbought and for a little bit of time. So it's still precautionary, but the trend of the market, the underlying trend of the market is still up. We're in that overbought scenario, but if the market is saying it's okay to buy stocks, there's the primary wave. The market is still moving higher, even though we're in overbought territory. That's why it's a zone. Did it pull back? It did pull back eventually. Look at that, coming out of the level of being overbought. Primary wave down. Look at the precipitous move of the MTI after that primary wave scenario hit. We fell a little bit. We got back to the level of being oversold. Not quite. Again, a zone close to that level of 0.60, but not quite. But what happened? Primary wave up. Could that have been the market bottom from this perspective? Absolutely. Primary wave up gave us that confirmation. And what did we do? We sort of middled a little bit. We got back down, MTI in that zone again, not quite at 0.60, but in that zone again. What did we get? Primary wave back up. Market moves back up. The underlying trend of the market went back above 1, so it was higher. All right. So those are some opportunities, and that's why I made the special note about it being in a zone. The market can still move higher, but it is a heads up precautionary. Let's go look at this one. Let's go look at let's go zoom in a little bit. Let's look at this one. There's your move down. And that's hard to sit through. It looks like, whatever, but that's hard to sit through. We've got the level where the market is looking for a top. We got a primary wave down here, but look at that. We stayed up. Finally, we got a primary wave down here. Finally, the market went down back below that level of being in overbought territory. All right, so that was why I really wanted to emphatically let you know that these are zones. Let's talk about what's going on right now. All right, so that's past performance. You can see that the indicator works. It does what it's supposed to do. In the current market's conditions right now, what's going on? Inflation. What's going on? Is the Fed going to be hawkish or is he going to be dovish? All of that is noise. All of that is news. What's going on with jobs? It's stronger than what it's supposed to be and blah, 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 blah. Right. Let's talk about what's going on. All right, right now, the underlying trend of the market is up. The MTI has been up above the value of 1 since 11/10 of 2022. What has the market done from that perspective? It has actually gone higher from the day where the MTI went back above 1. Where is it at right now? Let's click on it. We are at the level of 1.45. We're close to the zone. We're close to the zone. And now, what are we looking for if we get close to that market looking for a top? We're looking for some confirmation with the primary wave. We haven't gotten that yet. If you're tracking this from the standpoint of looking at candlesticks, a little bit of a doji yesterday, an open red candle, which is kind of bullish, bearish candle today. But where's the MTI? Close to that level of 1.50 and not quite there yet. What does that mean? Be cautious. Be cautious and just be protective. We are still in a primary wave up. The market is still moving higher. So nothing more than keeping your eye on the MTI as a level to let you keep you knowing what's going on in the market at all times. Folks, it is a powerful indicator. For those of you who are brand new, hopefully I've opened up your eyes to just how powerful it is. For those people who are subscribers and have been for a while, hopefully I've reiterated just how powerful that indicator is. Folks, you guys have access to one of the most powerful tools in the stock market to help you to not only make money, but to grow your money and maintain profits, no matter what anybody on TV or in the news or on the internet says. That's facts. That's truth. And the more you learn about how to use this tool, the better off you will be as investors. That's our goal. Folks, until the next time, my name again is Glenn Tompkins, Senior Instructor here, and I'll see you the next time I see you. Have a wonderful evening.
Yeah.